Time now for our chart of the day. Let's send it on over to Catalyst's co-host Madison Mills for a look at the S&P 500's CAPE ratio. All right, what do you got?
All right, well, we're taking a look at the S&P 500 CAPE ratio. This comes from Deutsche Bank in their 2025 outlook. And you can see here, it is a bit elevated compared with historic levels. But take a look at the dot-com bubble in heading into the early 2000s here. You can see this ratio was elevated for 2 years heading into that dot-com bubble. So kind of throwing cold water on this idea that we are in a very similar moment to those early 2000s, right? Because not only did we have 2 years of this ratio being elevated, but Deutsche Bank argues that this kind of tech bubble here in the early thousands was only popped by a macroeconomic downturn, and they don't necessarily see that coming in for 2025. They also note that if we do see that for 2025, the Federal Reserve has plenty of room to cut interest rates, so that could be a cushion for the economy. They also talk about growth estimates being revised higher for those mega cap, large cap names that are driving a lot of the expense debate in this market over whether valuations are too high. And those growth estimates rising a little bit could again be a sign that, yes, we may see this ratio continue to be elevated, but not so much as we saw in the early 2000s. So again, throwing cold water on that idea that we are in a tech bubble again, and also noting that they are overall cautiously optimistic as we head into 2025, guys.
All right, Maddie, thanks.